Yep, okay. Good afternoon, all, and welcome to the second event with Ozone. And today, Tim is going to partake his wonderful knowledge to you all about e-commerce. And just looking forward to the session. So, Tim, I shall leave it over to you.
Thank you, Michael. Hi, everyone. Thank you for joining. As Michael mentioned, my name is Taimur. I'm one of the senior accountants at here. Awesome. I'll share my screen and so I can share the presentation I've made. So today we're discussing on how to ace forecasting and growth for your business, and we will have some live Q&As at the end. Now, this webinar is hosted by Hammersmith and Fulham Council, which is supported by West London Business. Your presenter today is myself, Taimur Ghaffur. As I mentioned, I'm one of the senior accountants at Awesome. So the agendas today we have is, first of all, who Awesome is and what we do. We'll talk about fundamentals of forecasting revenue and growth, then forecasting phases and key definitions that can help you understand all of the jargons on it. Top tips of forecasting, and which is good for your revenue and growth, forecasting for startup, and lastly, common forecasting mistakes to avoid and what is a perfect forecasting looks like. So to start with, who are we and what do we do? So we are a very non-traditional accounting practice, and we are a technology firm that helps the processing of accounting and bookkeeping automated through an AI process. The whole system and the whole process is automated, and you get dedicated accountants and bookkeepers to help you get the automation in place, plus finalize your books. We specialize in e-commerce. Our whole ecosystem is based around the e-commerce segment and industry, and the automation is all there to help smooth the whole transition. Our customer gets direct access to the accountants and bookkeepers through a live chat. It's very informal and very straightforward and easy to use. We use automation to make slow accounting processes so that we can provide more valuable transitions to our clients and work with our customers. Me personally, I have been in different industries and working in accounting and finance for last 6 years across various sectors. That includes practice, solicitors, and charities. And currently, as you know, I'm working as an e-commerce specialist in Awesome. I'm also an ACC finalist and currently managing a portfolio of 200 clients. So that's us. That's me. Now let's talk about the webinar we are here for. So forecasting and how it helps you to understand your revenue and your future growth. Now, the technique is used by collecting historical data, inputting it in a way that makes information for you, which can estimate and predict the direction of your future growth. So let's say you start a business and you understand the industry, and you have some historical data to see how someone has done in this industry, or you've been doing a business for almost a year now and you've seen what happened in the last year. Use that to forecast what will happen going forward, and that can help you understand what business decisions are essential to make and what to avoid. It helps you achieve sustainable success. Without it, you're swimming in an open ocean without any direction. You don't know which way to go. With forecasting, you have a vision in mind, and it helps you not only in ideas but with specific numbers, and that's where the forecasting comes in. One of the things that should match is your forecasting and your business plan should be aligned with each other. So whatever you're forecasting, your business plan should be the same. So if you're planning to grow your business substantially in the next 6 months, then your forecasting should do the same, and it should align with it. And if you're planning to penetrate the market and grow your foothold, then your forecasting should do the same. So if they need to work align with each other and support each other. The way there are two different methods, which and again they dive into more detail and they're more understanding to it. But the two main high-level aspects of it is either it's quantitative forecasting or qualitative forecasting. Now, don't worry about the jargons. But what quantitative means is you use a historical data, you use what has already happened in your business, and as a business to someone who's doing the similar thing, and manipulate that data in a way that it helps you understand how the future would look like. and use that information to plan for future. Where qualitative is more where you get personal information by some experts. You look at the market trends and you see what happens in the market and how it can help you with your business. So there's a fundamental difference between those two. One is where you're using an existing data, and the other one is where using expertise. You're encouraging your sales team to find out the trends and understand those trends, and then use that information to forecast. So try to understand which one is better for your business. Again, with a very basic level, if you've just started, qualitative probably would be the better option. And if you've been doing business for a while, you now need to focus on forecasting. Quantitative would be better, and a mix of both could be the best option. One thing that I'll keep on saying throughout this whole webinar is keep it simple, keep it straightforward, because the more easier it is for everyone in your organization to understand, the more easier it is to follow. Forecasting seems to be a technical area, but it could be very simple and straightforward. Now, that's the fundamental understanding of what forecasting is. But whenever I talk about this, one of the most common question I get is, what is the main difference between budgeting and forecasting? In your last webinar, you said do budgeting, it's important. Now you're asking us to do forecasting as well. So why is budgeting not enough? Well, the most simple answer is budgeting is where you want to be. So it's a want, basically. Where your shareholders or your investors would like to see you, where lenders or you yourself want to see your business. Where forecasting is more the realistic situation of what it could be. So when you budget, you think about, okay, this is what we need to achieve, and then you give budgets to all of your staff members, your sales teams, your operations team, and you stick to it, saying that this is what we need to achieve. With forecasting, you then sit down and look at the realistic situation and say, okay, this is what we can achieve. Then you use both of them to see what the big gap is between them and try to cover that gap. Without budgeting, you cannot make proposals for your investors, because the investor want to see, what your aims are, what your motivations are. With forecasting, it helps you as a manager to understand what the gaps are and fill that gap. So that's the main difference between budgeting and forecasting. So what are the phases and how the whole process looks like? So as I said, the first stage is to understand quantitative or qualitative, and start, when you have decided which one, start gathering the data. Identify the events that are significant, regular. Use all of that, combine it together. Look at the behaviors of the demands of your product for services, and then put all of that together to make a forecast. And once you have that forecast in place, start using it on regular interval, monthly or every quarter. Compare the forecast to what you have already done based on the first three steps, and then adjust the forecast. So forecast has to be quite flexible. It does not have to be very strict and rigid. Budgeting can be, because budgeting is what you want to be. With forecasting, obviously, it has to adjust based on what realistic situation is. And then the circle repeats itself. So keep budgeting separate to forecasting. Budgeting could be, as I said, strict and in similar position, where forecasting needs to adjust, and then use that forecast to see your business trends and understanding and move forward with that. Now, before we move on to more technical aspects of things, let's look at some key definitions. Return on investment, and why is it one of the important elements for forecasting? Now, when you're forecasting, you want to understand what is your return. So forecasting is always done for the future part. And if an investor is looking at your forecasting, they want to see how much you are providing as a return on their investment. Now, return on investment is a formula that uses your net profit over the investment that they've made, and it gives you a percentage. The higher the percentage, the more you're returning to your investors. So return on investment will help you understand and measure the performance and evaluate the efficiency and profitability of the investment that has been made into the business. And every time someone looks at your forecast, they will also look at the return on investment. There's something called bottom-up forecasting. It's a method of estimating a company's future performance by starting at a low level and using low-level companies' data and work your way up. Again, this is where you look inside of your business and you see what the business is doing at the basic level, and then start working upwards and see what the trends are and how your business works. The other way to do forecasting is to look at the estimates of the company's future performance and then start at the high level and see this is where you want to be, this is where you will be, and then work your way down by looking at the market data and look at where your actual revenue will start go to. But again, these are some technical terms where once you get involved in the forecasting, then you can start looking at what's the best way based on your business needs and your business transaction itself. So now we know what these definitions are. Let's look at some tips, and we will use these definitions to understand how these tips work for us. So the first thing you need to understand when you're forecasting is why and who. So why are you creating these projects? Who is the person that needs this, and what are they supposed to do for you? So understand why and who. With this understanding, when you're forecasting, it will help you to understand what you need to include and what you don't need to include. Four keys to success in the forecasting is keep it very simple. As I mentioned, you will need to show this in a pitch deck slide. So very simple and straightforward. So anyone who's not a finance expert can also understand it. A finance expert can understand it, and anyone in the organization can understand it. It does not have to be very technical. A very most simplest forecasting can do, and it will help you grow. Always, when you're projecting, always make sure you throttle your growth projections. You need to maintain a growth rate to get new fundings. Again, it has to be realistic. The fourth point is to be aggressive, but be realistic. If you're unrealistic with your forecast, then it will defeat the purpose. So always make sure that it's simple, realistic, but aggressive, and shows a very optimistic position for yourself. Benchmark your financial data. Again, see what you're forecasting and compare it with the rest of the industry. See the percentage that you've put on for a return on investment, your gross profit margins, and see if whatever you forecasted matches with the rest of the industry as well. Because if you don't do this, and if your gross profit margin is a lot less than the rest of the players in the market, then you know that your supply chain is not working as well as others, and that can help you make some crucial changes. Maybe look for a different supplier, or see where you need to fix in the supply chain. Some basic tips. Start with expenses, not revenue. Expenses is something that you can determine without going outside. So you can see how much your fixed costs are, your rents, bills, employment cost, and what your variable costs are. And there will be a bit of a fluctuation with the variable cost, but it won't be significant enough. So when you start there, based on that, you know what your actual cost would be for the business, and then you can work on the revenue and look at the market trends and see how well you are compared to the market in terms of revenue. Once you know your cost, you know your sales price better. Without cost, even if you put out the sale prices, and if your cost is more than what it should be, then you are not making any margin on it. Check key ratios to make sure your projections are sound. As we mentioned, check your ROI. It's really important that you yourself know that the investment you've put in is valuable enough and your investors are getting the good return or not. Check the total headcount per client and check your gross profit margin. As I mentioned, these percentages will help you make sound decisions straight away. So rather than waiting for a whole year and checking your balance sheet and profit and loss, use these percentages to check on regular intervals. And if there's a big fluctuation, so for you, imagine last month you made 25% gross margin, and this month you're only making 15%. You're losing on 10%, where you shouldn't, because the more you sell, the more the gross cost should be. So there's something significant happened between this period. That could be, COVID hit, and now the delivery cost is a lot higher than it used to be. Your items didn't come in time, so you had to give promotions out to your existing clients. There could be anything, and you need to understand these trends. And the sooner you understand it, the better it is. And that's where forecasting will help you. Because you've already determined that this is how much you should have been, but because of this significant change in the ratios, you now need to make a sound decision. Know your data. The key to forecasting is to be prepared, know your targets, and track all existing data carefully. The more you know about the numbers on your business, the more easier it is for you to make decisions. Rather than making guesses or waiting for the end results, you can make sound decisions as and when you do the business itself. So we talked on a very general terms on what forecasting is, and we looked at the key definitions and top tips. But if you're starting up, one of the main question is, should I be spending so much time on forecasting and budgeting and all of these financial aspects, or should I not just focus on business products and business items? So the best option is, yes, it is definitely very crucial for the starting of the business as well, because uh, it for some it would look like it's a very costly start process, but it's not. It's something that you can do yourself, or you can get an expert guidance and they can consult you for it. But doing this will help you set a direction for yourself, and once you know the direction, you know where to go. So the things that you should be considering when you're doing it for a startup is make it a collaborative effort. So just don't focus it on doing it yourself. Just don't put all of your own personal energy on it. Every person that you have in your business who's starting with you, get their intake, ask them to help you with it. For example, go to the sales team, if anyone is expert in your sales department, ask them what do they think about the sales side. Go to your operational head, ask them of what their understanding is on the expense side. Review all of the data, do the market research, and do surveys and understand the whole trend, and then go for the forecasting. Again, I'm putting a lot of energy in saying that, again, this is important, and it needs to be coming from a big understanding of data, surveys, different people involvement, and different expertise. All of this combined together will make a perfect forecasting, which can help you understand the longer term results. Build granular models. Not all consumer will purchase your products at the same rate. So when you're forecasting, and when you're just looking at the revenue, just don't think of in a way that you have 500 products, you will sell it for 500 each, and you will make this much money. Remember that you will have to customize your transactions, your understanding on different elements with different aspects. So when you're forecasting, build it in a way which is flexible, and it's not very strict with the numbers, because that's not realistic approach. Do different iterations, do different assumptions, understand if a certain circumstance happen, what will what a forecast would look like. If certain event happens, what will your forecast look like? So just don't stick with one forecast and then that's it. Look at the current trends and make sure it's flexible enough to be moved into different range. Deliver the output that users needs quickly, and update the forecast on a regular basis. Combine different techniques, as I mentioned, different areas of different people, and forecast it all together. Do reality checks on the forecast. What we mentioned before as well. Always compare what you made to what actually happened. This will help you understand how off you are with your forecast. So if you're supposed to make £100,000 and you forecasted £100,000 in 6 months, but you only made 80, and there was a big difference of £20,000. This difference will help you understand what went wrong with your plan, what went wrong with the forecasting. You used all of the expertise, you used all of the understanding, but still there's a big difference in your sales. So you then start again and you search for the results. When you're doing this research, you will understand a lot more about your business than you would have without forecasting. So forecasting not only helps you understand the numbers, but it also helps you understand all of your supply chains, your basic value productions in the whole process. Forecast, monitor sales and qualitative feedback. Always make sure that you are taking feedbacks from all of the parties involved in the forecast. Try to be prepared to cut your losses. Always have a contingency plan. Forecasting is assumption at the end of the day. It's a plan for a future. It's not an accurate figure. So you always have to be ready for something. So a lot of people would have forecasted for the business to be in a great position. COVID happened. A lot of things went different ways. A lot of retail businesses struggled a lot, whereas e-commerce thrived. So you never know what can happen at any given point in time. Make sure you have a contingency plan behind the forecasting. Now, the last topic for the day is to discuss some of the common mistakes in the forecasting that you should avoid. The first one is to avoid using data that is not relevant to your business, and that normally happens with the lack of historical data. So make sure that you have enough data. If you're a startup, then you would not have the data, but there's a lot of data out there by the companies that have done something similar to what you're doing. Always take feedbacks on and make sure that feedbacks are accounted for when you're forecasting. Have a validation process. Failing to plan is a plan to fail. So forecast, plan for the future, and make sure you know where your direction is. Do not stick to singular ownership, as we discussed in the top tips. Get everyone involved, understand everyone's strength, and create a shared accountability for the results that gives a business partner full accountability for their part of forecasting. And it helps you with budgeting and obviously helps better participation and creation of the forecast. Always worry about what if. As we mentioned, COVID is a great example of what if this happened. So when you're forecasting, always have what if in place. Once it's not enough, keep on changing, keep on understanding the business and updating your forecast. What it also does is, once you have forecast in place, and let's say that one of your department, you gave them a budget and you forecasted that this is how much it will cost you. Although there could be a possibility that your management or that team could have done that project with a lot less money and resulted in a lot less cost, because they have this specific forecast, they will probably try to achieve it so that next time they still get the same budget or forecast. So for that reason, you have to revise and you have to work on regular basis to see what the actual costs are and avoid bad management behaviors. Don't focus on incremental changes only. An incremental change means that a person, you only look at what was achieved and just add a percentage to it as a growth. Rather than that, do more study. So be more hands-on with your forecasting and just being on a simple incremental side. Depending on the trends, that's too high. Don't just follow the trends. If you follow one trend and if the trend falls down, your whole forecasting of the business goes down because you've been focusing on that specific trend. Don't rely heavily on the forecasting model because it's an assumption model, and there could be some variable elements that can have a big impact on your business. And don't worry about missing your targets. Always change, because for your targets, budgets is there. Forecasting is more of a realistic situation. So what does a perfect forecast looks like? Again, it mainly depends on the business types and how your business is working in which industry. So a forecast for a technical product development or service industry would be completely different for e-commerce and normal retail business. So depend on what your business is, you need to understand which of the forecasting is more relevant to you. Are you at a startup position or have you been trading for a while? Can have a big impact on it. Bottoms up or top down forecasts are used in many ways, and it's extremely unlikely that one size fits all. So again, understand your needs and use it accordingly. Have a detailed granular forecasting, which is more effective, because the more you account for flexibility, the more it's realistic for you. Return on investment is a key element for it. So make sure that is significantly impacting on your forecast, and it helps you with your investors. Plus, it helps you to understand as well how much you're getting in return. Identify different uses for your forecast. See which group will be using what type of forecasting and what forecast is more relevant for which department. Design the forecast processes, which means that reviewing it every other month or quarter and then updating it, and make sure that it's integrated well within your business. Okay, so those were some basic understanding of forecasting, what it looks like, where do you need to be, and how it works for your business. One last thing that I will say to is, it looks like a big task to do, but every big successful business does this, and the reason they do this is to understand what it should be and to direct them and control them. So without direction and control, you can lose up on a lot of fronts. So help yourself by planning your business and plan your future directions. So we have a few more webinars coming forward. There's an e-commerce made easy, which is on 22nd of June, and online marketplaces on 29th of June. Get in touch with the council to sign up for them. Always remember, if you're coming through the council, you get 1 month free trial with awesome bookkeeping and accounting. If you're an e-commerce specific business, we are here for you. If you are a different business, we have different accountants within the awesome who can help you with it. Time for some live question and answers. Okay, so if anyone has any questions, please feel free to ask. If it's related to anything for the current webinar or anything else, I'm more than happy to discuss. That's what I'm here for. Also remember, we will pass these slides and webinar to everyone who has joined and signed up for this, so they can use it for their later use. Okay, so we'll wait for. Thank you, Natalia. Appreciate that you found it informative. We have quite a few webinars coming up. We did a few before as well, so feel free to ask for the recordings and join the next one. Anyone else has any other questions? Please feel free to write. So we'll give ourselves another minute and then we can pack up. All right, thank you everyone for joining. If you have any other questions, please feel free to get in touch with the council or ourselves. We'll be more than happy to help. Thank you.